I think after we broke 100 to the upside, there was a bunch of frenzy, but we started seeing sellers of some of the big OGs sold. We had the big seller, friends of mine sold some, and it was almost like a seller's virus. And then they used quantum as an excuse, quantum, to sell more. And then I think, prices are set on the margin. We had more sellers than buyers, and it created this cascade. Listen, every 4-year cycle, crypto gets kicked in the midsection and then poked in the eyes and then spat on and danced on. And it resuscitates itself, like Lazarus, it rises from the dead. This week was the single largest disparity of winners and losers I've ever seen, right? Software got destroyed and old economy stuff exploded. There's still so much money on the sidelines that wants to be in the stock market. Anthony, one of the simplest trades right now is short the NASDAQ and long Tokyo, long Europe. Japan's booming, right? They've got a reflation story going on there and it's booming. I would argue that we saw the tradable high in gold and silver last week. Like, if you want to look at market tops, look at the NASDAQ in 99, look at MicroStrategy 2 years ago. Like, what do bubbles look like? They look like what we just had in silver. And you never get back to that high. And so it was an amazing place to have your money for 12 months, right? Same with gold. Not so much anymore.
Markets do not always unwind slowly. Sometimes they snap. Mike Novogratz opens his analysis with a vivid metaphor, a sudden Arctic blast that compresses an entire winter into a handful of days. That is how this crypto drawdown felt. A violent, fast-moving repricing that shocked sentiment, flushed positioning, and forced investors to confront uncomfortable questions about where we are in the cycle. Novogratz argues that this downturn did not begin with a single catastrophic event. Instead, it began with success. After Bitcoin broke above $100,000, a wave of speculative frenzy followed. Momentum traders piled in, leverage expanded, and early holders, particularly large long-term OG investors, began to quietly sell. Before we go on, please take a moment to like this video, subscribe to the channel, and turn on post notifications for more content like this. Every action helps with the YouTube algorithm and greatly supports the channel's growth. Thanks for your support and enjoy the video.
We had in 5 days, kind of like the Arctic blast. Remember that thing they came over and they were like, it was the Arctic bomb or the cold bomb. And we did winter all in about 5 days. And listen, 60K in Bitcoin is the 200-week moving average. That's kind of held in the other crypto winners. I think that's probably a tradable low. We probably saw, my lips to God's ears, we probably saw, it doesn't mean we won't retest it, but we probably saw the low of this cycle. Why? Here's the big question is why. Often you never know till later. Somebody sold a lot. And then, I said this a few times on the podcast. I think after we broke 100 to the upside, there was a bunch of frenzy, but, we started seeing sellers of some of the big OGs sold. We had the big seller, friends of mine sold some, and it was almost like a seller's virus. And then they used quantum as an excuse, quantum, to sell more. And then I think, prices are set on the margin. We had more sellers than buyers, and it created this cascade, a little bit synchronized with worries about the equity market, even though the equity market's barely off the highs. But there was that worry, stocks had a bad week. And there wasn't a line in the sand where people came and said, I got dry powder to buy. Listen, we had the world's best salesman already hawking Bitcoin and Larry Fink, right? Biggest asset manager. You had President Trump. I actually think the president's involvement has from the administration, it's been great for crypto, but from the first family being as involved as they are, it's been net negative. Could make it harder to pass this market structure bill, and just the sense of this is supposed to be kind of anti-government. I would say we've had all our clients, meet their margin calls, and it's not been frantic. We talked to a few of our competitors that we have good relationships with, and they've had the same experience. There's a ton of volume coming out of Abu Dhabi in the Mideast, and There is speculation, though absolutely not verified, that, there's a big seller. I don't know if it's from Venezuela or where, that's been selling, and they've been selling through, proxies in the Mideast that then sell through Binance. So Binance has been a huge portion of this volume. I saw buyers yesterday for the first time.
Okay.
And, not in huge size. They came in, they bought, 10 million, 15 million, 3 million. And so we're closer to the buy range than the sell range at this point. What worries me more isn't, will Bitcoin go back below 60,000? I don't think it will. I think we put a tradable bottom in. What worries me is that after beatdowns like this, there's a lot of volume in the last few days, and there's a little bit of volume for the next few days, and then volume's slow. And people are like, oh. And so we bounce, and I don't know if we bounce this 80 or, between 70 and 80, and then we just kind of die for a while and then we're gonna need something to rejuice the thing. And so what could that be? Listen, Kevin Morse is gonna cut rates, but he's not in till June. That'll help. The market structure bill, if it passes, would help a lot. But I'm guessing there's something I'm not thinking about that's going to get crypto going again. But my real base case is we go into a pretty quiet 3 to 4 months after we bounce and hit a new range. Volatility will die and volumes will die. And that's not great for the business. Listen, every 4-year cycle, crypto gets kicked in the midsection and then poked in the eyes and then spat on and danced on. And it resuscitates itself, like Lazarus, it rises from the dead. Why? There are 250 million people around the world that have bought into this Bitcoin community. They're not going to just turn it off. There's so much vested interest. People own crypto, they want it to go higher. So they're going to figure out, how do I regroup and rebuild narrative? Now, there's never been a leader. We've had, little demigods within the crypto community, from Brock Pierce at one point, and, CZ and Michael Saylor and, Larry Fink to a degree. And so you'll see new salesmen plus old salesmen arise, and they'll tell a similar story with their own twist, and that will end up building momentum again. But it doesn't happen overnight. Like when Humpty Dumpty breaks, it takes a while to piece them back together. This week was the single largest disparity of winners and losers I've ever seen, right? Software got destroyed and old economy stuff exploded. There's still so much money on the sidelines that wants to be in the stock market. And so, it felt like a bear market on what it was today, Wednesday and Thursday. How about this Wednesday, when it felt the worst? The equal weighted S&P was at an all-time high. Like, we're at the highs of stocks with all this happening, with the chaos in DC. And it is chaos, right? It could be strategy, Trump is a very unique character in the annals of history, but it's chaos. And so normally the markets don't like that. They're just looking through it all.
Every 4-year cycle, crypto suffers a public humiliation. It gets beaten down, mocked, written off, and declared dead. And every time it comes back. Novogratz likens this process to Lazarus rising from the dead. The reason is not technological inevitability alone. It is human investment. Roughly 50 million people worldwide now identify as part of the Bitcoin ecosystem. They have financial, emotional, and ideological skin in the game.
Anthony, one of the simplest trades right now is short the NASDAQ and long Tokyo, long Europe. Japan's booming, right? They've got a reflation story going on there, and it's booming. I just was there. I came back. I said, I got to buy some Japanese stocks. I didn't, and they're up like 6%. And so for the first time in years, the last 12 months, rest of the world's outperformed the U.S. I think that's going to continue, right? Like, we're becoming...
Is that Trump related?
100%. Like, listen,
tell us why it's Trump related.
Well, because and this is not criticizing him even, this is what they said they wanted to do. We want to renationalize, deglobalize. The reality is it's impossible to completely deglobalize, right? We've got a $25 trillion supply chain built in China. Like, we need each other. But they send the message very clearly through tariffs, through hard trade negotiations, through ridicule and abuse that we think, you don't send Howard Lutnick into as your negotiator if you want people to feel warm and fuzzy, right? He's a bulldog and he's tough as shit. And the rest of the world isn't saying, oh, great, thank you very much, sir. They're doing what they need to do to keep trade alive with the US, and they're pivoting elsewhere. And so you're seeing capital flows. Again, US assets as a percentage of reserves are as low as they've been in 5 years. That's a one-way trend. We are losing our reserve currency status slowly.
By design, Michael.
Yeah, which is crazy.
Yeah.
In my mind, it's crazy.
Right.
But I think what Bessett would argue and what Trump would argue is we're not really losing it because there's no pretender, right? China's a closed currency economy, right? And I was just in Asia. I said, well, how many years before China could open their current account? 20, not 3, 20. And so you don't really have the renminbi as a potential reserve currency. And Europe, in 1989, when I started at Goldman Sachs, the European GDP was roughly the same size as the US, and we're roughly double now. Like, they're not the dynamic engine that deserves to be the reserve currency. And so that's why the market went to gold and silver. And then they went to, and quite frankly, stocks as a reserve currency. Like, what is the reserve currency? How do we do trade, but how do we measure our wealth? And it's going to get it's more and more challenging. I mean, Ray Dalio, right, moved half his life to Abu Dhabi, and he's big in gold and silver. I would argue that we saw the tradable high in gold and silver last week. Like, if you want to look at market tops, look at the NASDAQ in 99, look at MicroStrategy 2 years ago. Like, what do bubbles look like? They look like what we just had in silver. And you never get back to that high. And so it was an amazing place to have your money for 12 months, right? Same with gold. Not so much anymore, is my thesis. And so where do you put your money? Anthony, it is brutally hard to figure that out right now.
If you had smaller amounts of money, $100,000, $200,000, $50,000, and you have anxiety about your job, anxiety about the changes that are happening in the economy, in the overall markets, what would you do, and what are your recommendations?
Yeah, it's a great question. The first thing I wouldn't do, and it's what everyone is doing, is YOLO, right? There's like a nihilism in that younger group of saying, let me play for the 10 to 1, the 100 to 1. Let me sports bet. I'd ban sports betting for that group, even though it's great entertainment, because it just eats up your money. And I would probably end up, buying some stocks that look relatively stable and cheap. I mean, in some ways, it's hard to beat the S&P because it kind of gets you everything. And so buy some S&P futures or buy an index fund. It's not sexy, but I do think that is a decent way of preserving wealth over the long haul. And it's not paying 2 and 20, and it's not like crypto had an amazing chapter of wealth creation for people. I don't think crypto is dead by any stretch, but it's going to take a while for it to regain its momentum. Gold and silver had its move. I wouldn't advocate people being in gold and silver. And so right now, I kind of think you're at a global equity portfolio.
But if I put $1 on the table, you'd put some money in Bitcoin, or you wouldn't?
I'd put some money in Bitcoin. I still have a bunch of my own money in Bitcoin. And I think on the long haul, it's going to be fine. But I wouldn't have 50% of my net worth in Bitcoin, right? I like the Nikkei a lot. I think you got a big year in the Nikkei. I like Alibaba's stock a lot. China is the only one who can compete with the US in AI. And I think Alibaba's an easy proxy for that. And so I would have some S&P, I'd have some Nikkei, I'd have some Alibaba. But it's in some ways, unfortunately, it's an equity long. I don't think fixed income gives you enough, given the the yields that they're offering, to put a lot of money into it. In some degree, you don't bet more than you can lose, and you don't tie your happiness to a number. Like, I was an extremely happy guy when I was at flight school making $18,000 a year. Less to worry about, hanging out with my boys, flying choppers, chasing girls. Like, life was good. And I literally made $18,000, $1,500 a month after tax. And so I really think one of the problems people have is, especially, listen, below sustainability, it's a very different question. That I don't want to demean that stress, because if you're below whatever that level is you need to sustain the lifestyle, that's a ton of stress. But once you're above that, I think it's really dangerous to tie your happiness to some economic number. I got to be a millionaire. I got to be a billionaire. You got to try to win at something and stack wins. And so I think the way you survive the crises is, you know what? I'm still okay. I got a girlfriend that likes me, hopefully, or a wife that doesn't hate me. I got kids that are always going to like you because they're your kids. I got good friends, and you can be just as happy at $1,500 a month as you can at,
Novogratz closes on a deeply human note. Wealth is not happiness. He recalls being just as content earning $18,000 a year as a young man, with fewer responsibilities and simpler joys. Financial stress below subsistence levels is real and deserves empathy. But above that threshold, tying happiness to net worth becomes dangerous. The goal is not to hit a number. It is to build resilience, relationships, and meaning.